Okay, let's dive in then. Today, we're doing a deep dive into some, well, pretty specific and frankly quite surprising changes around the UK's winter fuel payment. We've been looking at sources like my pensions advisor, trying to figure out exactly what's happening this winter.
That's right. And our aim today is really to cut through some of the noise and give you a clearer picture. Who actually gets the payment now? How's the system changing? And what are the key implications based on what we've seen?
Yeah, and there are definitely some details here that aren't immediately obvious, like a very specific income threshold determining who gets it,
Hmm?
and this rather unusual way the payment might be recovered later through the tax system. It's definitely not the usual way the winter fuel payment has worked.
No, it isn't. And what's quite interesting is the background. The material we looked at suggests this change, which is basically a partial reinstatement for many.
Yeah, maybe some political sensitivity there.
Possibly, but looking at the actual policy details from the sources.
Exactly. The policy itself, the info we have, points clearly to the winter fuel payment being reinstated this winter for, well, the vast majority of pensioners. Specifically, everyone except around 2 million pensioners, apparently.
And the key thing, the mechanism for who doesn't get it, seems to center entirely on individual income. The Chancellor's announcement, as the sources detail it, confirms that individuals over state pension age in England and Wales with taxable income at or below £35,000 a year will get it.
So that £35,000 number is crucial. If your individual taxable income for the relevant period is over that, you're likely one of the estimated 2 million who won't be entitled this winter.
Exactly. And the material does mention the cost bringing it back for these roughly 9 million pensioners means finding 1.25 billion for the exchequer.
Which does lead to an interesting point that was flagged up.
Yeah.
The stated saving from excluding those 2 million individuals, the source puts it around 450 million.
Yeah.
But earlier estimates, back in July 2024, suggested savings of 1.5 billion if they limited it just to pension credit claimants.
That's a big difference, isn't it?
It really is. Quite a gap between those figures. But let's get into the bit that might raise the most eyebrows, how they plan to handle cases where someone gets the payment but then turns out to be over the £35,000 limit based on their final income. The sources use the phrase clawing back the payment. How's that supposed to work?
Well, it's described as being modeled on the high-income child benefit charge.
Okay, familiar with that one.
Right. So, higher earners repay child benefit via tax. Here, for the winter fuel payment, the idea is that for most people, it'll be recovered through pay as you earn.
Ah, through their tax code.
Exactly, adjusting the tax code. For others, those doing self-assessment tax returns, it'll be handled that way. HMRC is apparently tasked with making it simple.
Okay, let's just unpack that slightly. So you might get the payment automatically if you're the right age. But if HMRC later figures out your individual taxable income for that year went over £35,000, they basically take it back by making you pay more tax later, probably by tweaking your tax code so more tax comes off your pension or whatever, or via self-assessment.
That's precisely the mechanism described. And a really key difference compared to the child benefit model is that this is based only on individual taxable income.
Right. Not household income.
No aggregation of household income needed for this recovery part. That's
Yeah.
quite distinct.
That individual basis is important. What about couples then? Did the source mention anything specific?
Yes, it did. For couples, the expectation is they'll get a shared payment, maybe split like £100 each if the total is £200.
Ah, to keep it simple and aligned with the individual idea.
Exactly. The design aims to fit with that individual income test.
Got it. So it's all about your specific income versus that £35,000 line. The material also mentioned an opt-out option for people who'd rather just not get it or deal with the tax act.
Yeah, the DWP is meant to develop a simple system for opting out. However, the timing looks tricky. It probably won't be ready for this winter's payments. Draft legislation is expected later, maybe autumn budget time.
Okay, so for this winter, looks like if you're age eligible, you'll likely get it unless you're clearly over that 35K individual income threshold.
Okay.
And then the tax system is the plan B for recovery if needed.
That seems to be the situation.
And the fact, as the sources noted, that the Chancellor needs to find $1.25 billion just for this change, a bit of a policy U-turn really is significant too.
Indeed. It definitely ties into the wider financial picture the government's dealing with.
Right. So just to quickly recap this deep dive on the winter fuel payment changes. Largely back for most pensioners, but there's that strict £35,000 individual taxable income cap. If you're over it, the plan is HMRC recovers it via tax, based only on your income, not the household's.
And the opt-out. Coming, but likely not for this winter.
Got it.
Which does raise a final thought, really, for you listening. Given the Chancellor needs $1.25 billion for this change, and considering those slightly conflicting figures on savings compared to earlier plans, what might all this signal about the ongoing financial pressures, in the UK, and maybe the sheer complexity of trying to balance support with keeping the books balanced?
Definitely summed them all over. Thanks for joining us for this deep dive.